I'd like to welcome you all to today's B4 Live webinar with Alan Morgan of Whitley Stimpson, and we've also got Maria Cunningham from Whitley Stimpson, if you'd both like to join us. Hi, how are you?
I'm okay, thank you. How are you?
Yeah, good, thank you. Good, thanks. And Alan, you're good and well?
Yeah, very good. Thank you, Richard. Yeah.
Excellent, brilliant. Well, we've got, we're going to hand over to you in a second. We've got a few questions that we've had submitted to us in advance. So we can run through those first, and then if everybody else, if you've got a question for Alan, put it into the chat box and I'll coordinate those on behalf of Alan. And if everybody wouldn't mind, we'd just like, there's a special request for everybody to turn their cameras on. If you're having a bad hair day like I do every day of the week, and you're more than welcome to stay off camera, but it'd be great to see you and create a little bit more interactivity for Alan and Maria. So, good morning, Laura. Thanks for taking the plunge. And Elio, good morning. Well, good afternoon. Over to you, Alan.
Okay, so what I'm predominantly going to talk about is the coronavirus business interruption loan scheme, known as CBills. So if we can call it CBills, I think that'll just make things a lot quicker. And just really try and I think there's a lot of confusion out there, partly the media, coming forward with things which are not necessarily accurate. And I think the banks personally are coming in for a lot of stick with this, when really all they're doing is actually applying what the government are asking them to do. So it's really, just to run through the scheme. So before we get into the actual scheme, if I can just sidestep and just go through things that I think businesses need to or should consider before looking at CBills. This is important because the banks, if you go for CBills, the banks are going to want to see that you have done this prior to actually asking for a CBills support. So some fairly obvious things. Do any insurance policies cover what's going on in the world at the moment? We haven't come across anybody at the moment that does have insurance that covers this. As I understand it, although I'm not an expert in insurance, business interruption policy does not cover it. But I think it's worth talking to your brokers just in case there is some policy that is covering you. People need to be looking at business rate holidays for the relevant business sectors. Are you getting the business rates holidays? The local authorities have been pretty good with this, of identifying those. The cash grants for businesses, so businesses in leisure, hospitality, etc. Sector with a rateable value between 15,000 and 51,000. Then they are getting a £25,000 grant, and the ones with a rateable value of less than £10,000 that are typically getting small business rates relief, they're getting a £10,000 grant, regardless of what industry sector they're in. Some of those people are off the radar because they're not paying anything. So do check whether you qualify there. A big thing, the hot topic this week has been the coronavirus job retention scheme, furloughing. So that all became live on Monday in terms of being able to populate the portal. So this is something, all the things at the moment that I've spoken about, they're all grants. They're not actually costing you anything. They haven't got to be repaid. So assuming you're furloughing and furloughing at 80%, then you're getting that cost reimbursed by the government. So as I say, these things haven't got to be repaid. Although I'm sure that all the people on the call today, I don't think there's any self-employed people, because I think if you're self-employed and you're looking at CBills, effectively the guarantees don't apply to you. So, but for self-employed people, there is the SEI SS scheme available. VAT deferral, don't forget about the VAT deferral, that if you've got a VAT payment due between now and the end of June, that doesn't need to be paid. You can defer that until 5th of April next year. The bank are going to want to see that you've done that and taken advantage of that before they look at CBills. Then, fairly obvious thing, look at all your costs. Look at the cost cutting. You know, what cost cutting can you do in your business? Look at all the costs, the big ones first, and go through them and talk to your landlord. If there's rent, you know, can you get money off your rent, you know, or rent holidays, that type of thing. In terms of finance agreements and loans, we're told that the financial institutions, you know, are being sympathetic in terms of getting holidays, in terms of repaying those loans. Do talk to lenders and get repayment holidays if you can. Do not, in my opinion, you shouldn't just cancel the payments due to them without talking to them first, because this could affect your credit rating in the future. So get their agreement before you cancel any arrangement, any loans, that type of thing. So, I mean, I was now going to go on to just outline the CBills scheme. Are there any questions? As all those things that I've talked about there invariably mean that you're actually getting money, obviously deferring loan agreements. You've still got to pay them, but there is an awful lot of help out there where you can just get grants and that it hasn't got to be repaid. Are there any questions at this stage on that, or shall I go on to outline the scheme?
Any questions, anybody? Want to raise a hand? Oh, okay. Thanks, Alan.
Okay, so just in terms of the outline of the scheme, I'm not going to talk about large businesses today, because most of our clients fall in SMEs. We do have some large ones, but most are SMEs. So the SMEs, the annual turnover to qualify for CBills has to be less than 45 million. And the amount of finance that can be accessed under the CBills scheme is up to £5 million of borrowing. An important thing to stress at this stage is that those loans under the CBills scheme are repayable in under 6 years. The maximum term is 6 years, and people really need to think about borrowing this money and what the impact is going to be on their cash flow of repaying these loans. There's favourable interest. There's no interest in the first year, and it's fee-free in the first year. And what I'm finding is that in terms of certainly the main banks, is that you can get capital repayment holidays varying between 6 and 12 months. So I know NatWest, for instance, are actually saying on their website that you don't have to repay anything for 12 months. But what that does mean, of course, is that the loan has to then be repaid over a 5-year period, not a 6-year period. So think about the impact on your cash flow. The government provides an 80% guarantee to the lender, the bank, in terms of the loan. So, and there are no personal guarantees required of borrowings up to 250,000. So I'm just going to talk about borrowings of up to 250,000 today. Yeah, no personal guarantees. So what that means is if you're a limited company, then you haven't got to personally put any security on the line in terms of the borrowing. From what I can see, I think if you're a sole trader or a partnership, having this no personal guarantees doesn't actually help you at all, because you haven't got the limited liability protection around you. In terms of the borrowing, it has to be viable. So if the borrowing would not have been seen as viable before COVID-19, then it's no different, I'm afraid. So one of the things that the banks have been told by the government is that the borrowing must be viable. And generally, those decisions are being based on the historic accounts. So typically, we're being told the 2019 accounts. So if your 2019 accounts showed that you could not support the borrowing that you're approaching the bank for, then I'm afraid you're really going to struggle to get it. It has to be viable. So if the 2019 account showed that there wasn't enough surplus profits to repay the loan, and there was a reason for it, so there might have been, high capital expenditure or some one-off reasons, then you need to talk to the bank and explain that that's not going to recur in the future. But generally, as I say, it's going to be based on the 2019 figures. You have to prove, another requirement of the scheme is that you have to prove that your business has been adversely affected by COVID-19. For most people, I don't think that's going to be a problem. As most of you, I'm sure, know, these loans are interest free for the first year, and the fees are paid by the government. In terms of the amount of the loans, this was something that was announced fairly recently. The loans are limited to a maximum of 25% of the 2019 turnover, or twice the annual wage bill, whichever is the greater. So that will give people an idea of the amount that they could borrow. But as I said earlier, you need to think about the fact that this has got to be repaid. So, and the impact on cash flow. The scheme is delivered by accredited lenders, of which I think there are 40 odd at the moment, and that's being increased. There are other financial institutions that are being added to the list. I think the latest one that's getting a bit of press is Funding Circle, and I think it's been announced that they are going to be in the scheme, but I don't think there's anything live with them until next week, I gather. So typically what I'm finding is that the high street banks, for the most part, are only offering these loans to their existing customers. That's simply because they've got, that they're all so busy that they're concentrating on their own customers first. But I gather that I've heard this morning that Santander are looking at cases of non-customers, but I think it has to be a pretty good case for them to actually look at it. So it'll be a strong case. So if it's a strong case and the current bank are delaying on it, then I understand that Santander will look at it. So that's an outline of the scheme. Are there any questions on the scheme before we move on to Richard asking me some questions?
Yeah, we've got Barry. Did you want to come on and ask your question quickly? Okay. Barry's question simply was self-employed again, please.
Sorry?
Self-employed again, if you could just go over conditions for self-employed, if possible.
Okay. As I see it, the guarantee that the government give in terms of the relaxation of the personal guarantees, as I see it, if there's a sole trader or a partnership, i.e. a non-limited entity borrowing the money, I can't see that it gets them off the hook, because effectively they don't have the limited liability protection. Does that answer your
Is that okay, Barry? If you just want to drop me a note in the chat. Right, should we move on to the questions that were sent in before then, Alan? So if question 1, if I were a business owner, should I apply for CBILS?
Sorry, could you just...
Of course, yeah. If I were a business owner, when should I apply for CBILS?
Okay. Now, there's been a bit of confusion here. Some of the banks... CBILS comes to an end at the moment, at the end of September this year. And what some lenders are saying is that if you don't need the money now, then don't clog up the system, because come to us later in the year, or in a few months' time when you're actually going to need it. Other people are saying no, talk to us, engage with us sooner rather than later. So there's mixed messages coming out from the banks on this. I would tend to say keep your bank informed. So if you can see that you don't need the funds at the moment, but you're going to need them, engage with your relationship manager, and just keep them informed of what's going on, and that you're going to possibly need it in a few months' time or whatever. In any case, I mean, if you are going to leave it, I would suggest that you keep the bank informed and talk to them sooner rather than later. But if you're going to leave it, then allow at least 6 weeks before you need the money to when you're actually talking to the bank, because there's quite a bit of information that they're going to need, and it does take time to process.
And that leads us nicely into the next question, Alan, about the information the bank will need.
Okay, now the information the bank will need, again, it seems to be varying from bank to bank. I came across one client that admitted it was a fairly small facility that he needed, but all he did was provide his 2019 accounts, and then had a phone call of about an hour from the bank, and they did everything over the phone. And at the end of that, he was then given the loan. But generally speaking, they're going to want the last 3 years' accounts, and that will include generally the 2019 accounts they're going to need. They will want cash flows, and obviously it's really difficult for businesses to do these. So my suggestion is that you do scenarios. You can do, okay, this is what I expect, this is worst case, this is best case, and tell the bank what assumptions you've made in doing those cash flows. So a business plan, budget forecast, that they're probably going to want that as well. And going back to the beginning, a summary of what actions you've taken in terms of your business. What have you done in terms of cash grants, that type of thing, and almost like an impact statement. This is how I see that COVID-19 has impacted on my business, and this is how I see it going forward. But tell them the assumptions that you've come to when arriving at the figures. That on the British Bank's website, they're saying details of assets. Now, I'm unsure as to whether some banks say that they want personal assets and liabilities. I can't quite see why they need that if there's no personal security, but so some banks may ask for that. I think in terms of actually how you're approaching your bank to get these loans, without doubt, it's easier if you have a relationship manager. If you have a relationship manager who you can talk to, what I'm finding is that those relationship managers will work with you and help you with the application. Even if you have a relationship manager, in terms of presenting the information, talk to your accountants. You know, your accountants can help you with this. Or you could talk to a broker. With a broker, they invariably charge a fee. That's not covered by the government scheme, so they will charge you a fee, but often they have direct lines into underwriters and the business development team. So I think there's a time and a place for a broker personally, but a lot of the numbers that are coming out, why there's been low take-up or low approval rather of these loans, is because people are not presenting the information correctly to the bank. So this is not a back of a fag packet exercise. You've got to present the information in the proper way. So yeah, so that's typically the information.
Thanks, Alan. Thanks for that. And third question, really in line with David. David, are you there? You'd like to ask Alan direct? Is it Donald Sutherland, David? There he is, yeah. Do you want to ask Alan your question direct, David?
Hi, Dave.
No? Okay, I'll ask on your behalf. It's all about the cost, basically. How the primary and secondary lenders pricing the facility. Is it an interest rate set by the banks or secondary lenders, or is it set by the government?
The banks are, so it will be the lender that is pricing this. What I've been able to glean in terms of what rates are they, obviously at the moment we have a very low base rate. So typically these loans are being done on a variable rate. From what I can see, the main banks are between 1.75% and 5%, and non-banks between 6 and 12%.
Brilliant, thank you. Another question we've got is about a CBILS overdraft. Someone's read that you can get a CBILS overdraft. If that's true, how does that work?
Okay, again, there was confusion over this because I think on the British Bank's website, they were saying that you could have this by way of an overdraft, and indeed the government's own website still says that you can have a CBILS by way of an overdraft. I wondered, how all that would work, but when I talked to the banks about doing these on overdrafts, none of them that I know of have the product to actually do this on an overdraft. And what they're saying to me is, why would you do an overdraft? Because effectively you get the money, and say you haven't got to make a repayment in the first year, it's not actually going to cost you anything to get the loan, and then at the end of the year, or indeed after that, if you find you don't need the loan, you can just repay it anyway. So and there's no fees for early redemption. So I think you can really ignore overdrafts. I don't think CBILS, that there's an overdraft product that fits with CBILS personally.
Okay, and if you're one of the few, it sounds, that are lucky enough to get accepted, how long does it take to get the money coming through?
Okay, what I'm hearing from the main banks is once the application is made, and it goes to the underwriters with all the information that they require, that the turnaround is then fairly quick. One bank told me 4 days. So where you're hearing of in the media that things are taking a long time to turn around, I think it's because all the information hasn't been provided to the lender. That's what I think is going on. I'm being told that it's turned around fairly quickly, but what the main banks are saying to me is that if they know that the loan's going to be approved, but there's an immediate need for the cash, that they will support you by extending facilities anyway. So yeah, these things where you're hearing that it's taken an awful long time. From what I understand, from talking to my bank connections, that's not the case.
Fantastic. And final question. I mean, it's coming through loud and clear, Alan, that the top tip from you is making sure the information is presented properly in the first place. That's going to give you the best chance of being successful. But just to summarise, two or three bullet point headlines, what makes a successful application?
Yeah, so top tips in terms of an application would be, spend time on your presentation, what you're giving the bank, and presenting your case. You've got to demonstrate viability here. It's got to be viable. So if as I said before, if it wasn't viable before, then it's not going to be viable now, unfortunately. So yeah, be sensible, be realistic. This is repayable over 6 years. Okay, so it's going to have an impact on on your cash flow. If customers are fortunate, to have a relationship manager, then work with your relationship manager, and with your advisors as well. Engage your accountant, because your accountant can help you an awful lot with this. So engage with with the professionals. One thing also final tip, I did hear that one application was turned down because a business owner had put dividends in the cash flow, and the bank said, we're not going to finance your dividends, when effectively what a lot of small businesses do is they remunerate themselves by way of dividend. My advice there is don't show it as dividend, show it as salary, because but don't go overboard in putting unrealistic salaries in. Be realistic in what you're putting in.
Brilliant.
So, I think that's
any last ditch questions? We've got a couple of minutes, but I think, Alan, it's very comprehensive. Thank you very much for your time, and hopefully everybody's gained an awful lot of benefit from your presentation. We will be circulating Alan's details, so if you do need to get in contact with Alan direct, we'll send a copy of this video out with Alan's details, so please do make contact. I'm sure he'll be pleased to hear from you. So thanks, Alan, and thanks, Maria. And just to round off, just to direct you to the B4 website, we've got the community pages where B4 members are updating regular news and advice. Oh, sorry, I didn't mean to get Grant Thornton in there straight away. Just the way the cookie crumbles. And we've got, for those of you that aren't B4 members, we've got a B4 membership 90-day trial that ends at the end of April. So if you do want to apply for B4 membership, it's a free membership for 90 days to get access to all B4 lives going forward, then please do sign up as an individual or as a company. That's a no obligation trial. In terms of future B4 lives, go to the B4 live page on the website, and we've got talks every day. We've got a few coming up the rest of this week. This afternoon, we've got Arjun and Anissa Kaker, all the way from Atlanta. Arjun's formerly of Sinelman Foster and Partners, architect, and Anissa runs an international makeup brush company. Both quite a formidable couple. It should be interesting to hear how they're coping with coronavirus. Tomorrow we've got Helen Wright, many of you will know, from 9 to 3, recruitment agency. And then on Friday we have Tom Cheesewright, who's a futurologist. So my first question is, did you predict this, Tom? And if you did, when are we coming out? So that's, I'm sure we'll have a bit of fun with Tom on Friday. And he's followed by Rebecca Howlett from Freed. So plenty to look forward to. Thank you for your time. Thanks, Alan. Thanks, Maria, for supporting B4 Live. Have a good rest of the day. Take care.